it going, everyone? Mario here. As discussed last week, markets were just range-bound, consolidating into the entire week when it came to SPY, QQQ, IWM. Now, let's talk some hypothetical scenarios. Let's talk some speculation. We all can agree that we are in an uptrend. Yes. Now, when you start seeing the headline saying that we are entering a new bull market, time to start playing the devil's advocate. We will start with seasonality. June is typically a flattish to meh month when it comes to the stock market returns. Though the technicals still look bullish all across the board, and there is no clear indication for reversal of any sorts, we will discuss the potential sell-off scenario and where to get involved to the long side if that happens. Note that we are just talking about pullbacks and not outright crash. We will start with what might bring some volatility back into the markets leading into this week. We got CPI on Tuesday, that can bring in some volatility. PPI on Wednesday. Retail sales on Thursday. These events are potential risk moving into the upcoming week. If markets push up from these events, it wouldn't be surprising at all, as it'll be in the direction of the trend. But note that we are playing the devil's advocate here. We don't care what the data says. We're not going to do that. Oh, if CPI comes in at these levels, the markets will crash. We are just gonna go over different scenarios so as traders we can be aware of the potential risks that can impact the price action and the catalyst that can fuel the expansion of volatility, aka being aware of the potential risk. Let's talk such scenarios with SPY. Let's assume that next week the market starts to pull back. Where will you buy the dip? There is something called as the 5% Canary rule. If a stock in an uptrend, which has the positively sloping 50-day moving average and the 200-day moving average, pulls back from the 52-week highs or the recent highs to 5% to the downside, buying the strength from the pullback has 66.67% chances that the price will be trading higher than this price point of 5% 10 days later, 75% chances in 21 days, and 87.50% chances in 42 days. Where does the 5% from here put SPY at? The 410 area. If buyers start to step in, that is where I will personally get involved again. If you missed out on this rally, that won't be a bad place to get involved as well. Something to note, we are talking about hypothetical scenarios here. If they break down, we will have the 410 area as watch to join the strength if they start bouncing from there. So leading into upcoming weeks, this is a potential downside scenario in case of a steep pullback. I have attached the 5% Canary rule paper in the description if anyone wants a detailed explanation on the same and the backtested data on the same. Note that this paper has won the Dow Award, and this is not some opinionated piece of shit trash. This is a research paper, so make sure to give it a read. Very informative. Now let's look at the price action as a whole. The daily charts on SPY. Last week we discussed the possibility of a consolidation between 429.60 to 431.50 zone to 425 to 426.50 zone in SPY. Last week was the tale of chop, just consolidation between these two zones. Now let's look at the daily charts. This is a bit concerning daily candle. The candles are just a representation of what the buyers and sellers did and how they settled the battle into the close. Price tried to push up higher intraday only to reverse everything into the close and close under the opening print. This shows weakness into the session. But one day of price action doesn't signify a trend change. We are looking for multiple puzzle pieces to put them together to come up with a high probable scenario. Let's go over the 15-minute chart to dive in a bit deeper. The bull case is price pulling back towards the positively sloping 5-day moving average, which will be 130 MA in the 15-minute charts before continuing in the direction of the trend. Markets can use these macro events as a catalyst to gap up higher above 432 as well. Now, if this happens, as mentioned earlier, it wouldn't be surprising as it's just a continuation in the direction of the dominant trend. Now, as traders, we need to be aware of the other two scenarios. Our job is not to predict stuff, but to be prepared for multiple possible scenarios and trade the price action. The second scenario is breaking into the box and sticking to the range of 432 to 436 for quite some time. This is the if they can't scare you out, they will wear you out phase. Boring consolidation with no considerable move from the underlying trend. The third scenario is the bear case we discussed about, the 5% Canary scenario. The price having a steeper pullback towards the positive 50-day moving average. This will be a gift if given and if price found strength from the same levels. VIX tells us that there is little to no fear or hedging going on with the markets. Now, oh, the VIX is broken. If I get $1 for every time I hear this, I would have gambled it on an out-of-the-money call option in SPY. This is from 2013. Sounds something similar, isn't it? Markets are funny. With different cycles, we will have different idiots who pretend like they know what they're talking about. Anyway, we might get some volatility into next week with all the macro events and cards. We have discussed the three scenarios that can happen. Depends on which route the markets take, we will position ourselves and trade accordingly. Leading into this week, I have added Airbnb and Berkshire Hathaway in my watch list for potential swing trades. TKT members will get detailed analysis on VRRM, URBN, Enphase, Berkshire and Airbnb. The analysis on these stocks will be out shortly after this video. If you want to join the community, the link is down below in the description as well. That being said, manage the risk. I'll see you guys in the next video. Take care.